Hey folks, it's Mandeep, and I'm going to show you another useful indicator today, and that is the moving average crossover on multiple time frames. Now, most of you are very familiar with standard moving averages. A lot of people use 9 and 21, right? So if it starts to break below 9 and 21, they think the trend has changed. A lot of people use 50 as an intermediate term moving average. A lot of institutions use that as well. And the 200 days use more of a longer term moving average, right? So that when things actually drop below 200-day moving average, you want to be a little bit more cautious, right? Because once again, the longer term trend has changed and gone against you. But what we look today is, an indicator that I've developed that uses the moving average crossover of 9 over 21. Uh, 9 over 21 is not something that you have to use. It is completely configurable. If you want to use 8 and 15 or any other combination of short to long term moving average, you can actually use that. And there are two indicators, and I'll show both of you that are actually included in the package. So let's start first by adding the indicator, and let's go and search for moving average. One is the moving average crossover, and I'm going to add that. And then I'm going to add the moving average signal that's added too. And then we look at the all uh, moving average, and we'll go with the 2-minute one. I'll tell you why we'll go with the 2-minute one, although you can use any of the other time frames as well. But the two will give you some very useful information as you start. So let's apply this, and let's switch to the 2-minute chart now. So what you see here is the actual indicator. Now this is just standard, 9 over 21, and it just plotted slightly differently. So it's like you can see a little bit of a cloud formation in this, but this is 9, this is 21, and it's easy to go into this and be able to configure this as well. So if you look at this, you can see that it's a 9 and the 21, and you have a choice of different averages depending on your choice. You can use simple, weighted, Wilders, etc. And again, you can configure whatever the short and the long term average that you prefer to use, but I think 9 and 21 is fairly standard. And likewise, here is the um, indicator that's actually plotting 9 over 21 on multiple time frames, and you have the same choice here, right? So you can uh, pick your moving average type, and then you can pick the small moving average and the longer term moving average. So for now, we'll just stick with 9 and 21. So one of the things you see here is, x2, x3, x5, etc. What this means is, but for 3-minute, 5-minute, 10-minute, 15, 20, 30-hour day and a week, the 9-day moving average is over the 21-day moving average. So that gives you good information with respect to the fact that this is a stock that's actually trending in the right direction. And what you see here at the bottom is something similar, but only shows you 4 different time frames. And one of the thing at the on the bottom indicator, it automatically computes the time frame. So the top bar is always it always jives with the current time frame you have. And in the next case, it's using 5, 10, 15, and then if you are on a 10-minute chart, this would be 10, 20, 30 hour. If you're using the 15 minutes, this will be the 15, 30-hour day. If you're on the day, it'll be day, 2-day, 3-day week, right? So once all the time frames are in your favor, that really puts a probability of trade to be sort of much higher for it to work out. So the easiest thing to do is just have this display, and this is just telling you that the chances of this trade being wrong are going to be much lower than something that you end up choosing by yourself. Now there's also a scan that I've run, and in this scan we're just looking for all stocks, and we can take a look at a couple of these averages here as well. So this is the again, this is still the 2-minute chart, and once it paints, you'll have a better sense of what's going on. So as you can see from just about here to about this period, the 9 day was below the 21-day average, and the crossover happened. And at this uh, juncture, everything got aligned, right? So your four different time frames got aligned, and all the way from X2 to the week is also true. So this is only giving you like four time frames. In case of a 2 minute chart, as I said, it's giving you 5 minute, 10 minute, and 15. But you also know all the higher time frames are in your favor as well. Now, if we can also switch to the day chart, and when you switch to the day chart, you have to apply. It's a similar indicator, but you have to apply a different one. Um, but this will automatically compute. So let's go into the day chart and see what's going on with these stocks, right? So again, as you can see, at this point in time, right about here, everything got aligned. At this stage, day was good, 2 day was good, and if you took the trade here, so 2 day, day, 2 day, and 3 day, 9 period moving average was greater than 21, but the week wasn't. So I mean, you can just play around and see what works best. I mean, I personally like when everything is sort of aligned in the same direction. Now, this is a trade that I'm currently in, and this is actually Microsoft did quite well today, even in sort of a bad market. And we can go and look at other sort of random examples, and it'll give you a feel of how this indicator is useful. So right around here, you can see everything is aligned. You take the trade. This is a period which is a little bit sort of messy, right? And you can see there is no continuity here, and it's blank because the sum of them is not true. So therefore, you actually had you know a breakdown in the stock, and you probably don't want to play the of course on the long side. This is not the best place to enter. So you wait for it to cross back over, and ideally, if you want to get confirmation for more than one time frame, you can use that. As I said, you can use it on any different time frame. If you use the 15-minute, you will see it's 15-30 hour day, and this is a really good example. Let's go back and see when things started to align in the same direction. So this is the point, or where everything was aligned in four different time frames, and we can go ahead and add the upper uh, uh, symbol as well, and that's the 15 one. So we add that, and now you'll see that you have 15, 20, 30 hour day and week. So assuming you trade on a 15-minute chart, then you will end up using the indicator that begins with 15. This one, of course, will be computed automatically for you. So we can again to look at some of these stocks as part of the day trading list that I have, and as you can see, so these have been doing well because everything is sort of aligned in your favor. Let's look at Microsoft on the 15-minute time frame as well. Now, same thing happened. You got a buy signal, you know, an early buy signal would be, uh, if you didn't want to wait for confirmation from all of them, but here you get one, two, and three confirmations, you could take the trade. You get a little early signal, but if you want to wait for all four, then you take the trade here. And so this is all telling you that uh, this is a good and a high probability trade to take. And in these cases, as you can see, this is a scan that I've created. And if you were to use this scan, this will automatically give you all the stocks that are trading um, 9 greater than 21 on multiple time frames. So hopefully this gives you a little overview of how this indicator works. If you have any questions, feel free to send me an email. Thank